Wall Street suffers largest weekly loss on account that January after hot CPI facts. New York U.S. shares published their biggest weekly percent declines considering the fact that January and ended sharply decrease on the day Friday as a steeper than expected rise in U.S. purchaser costs in May fueled fears of more competitive hobby fee hikes by the Federal Reserve. Tech and growth shares, whose valuations rely extra closely on future coins flows, led the decline. Microsoft Corp. Nasdaq, MSFT, Amazon.com Inc. Nasdaq, AMZN, and Apple Inc. Nasdaq, AAPL, drove losses within the S&P 500. Following the inflation document, two-year Treasury yields, which might be particularly touchy to fee hikes, spiked to a few 0.057%, the highest due to the fact that June 2008. Benchmark 10-year yields reached 3.178%, the very best because May 9. The U.S. Labor Department's report confirmed the Purchaser Fee Index (CPI) extended 1.0% remaining month after gaining 0.3% in April. Economists polled by using had forecast the monthly CPI selecting up 0.7%. Year-on-year, CPI surged 8.6%, its largest advantage seeing that 1981 and following an 8.3% bounce in May. Stocks were volatile this 12 months, and current promoting has in large part been tied to issues over inflation, rising hobby rates and the probability of a recession. Today's document have to extinguish any pretense that a pause in rate hikes will likely be suitable with the aid of the quit of summer season, because the Fed is really nonetheless at the back of the 8-ball on bringing inflation under manage, said Jason Pride, Chief Investment Officer for Private Wealth at Glenmead in Philadelphia. The Dow Jones Industrial Average fell 880 points, or 2.73%, to 31,392.79. The S&P 500 misplaced 116.96 points, or 2.91%, to 3,900.86, and the Nasdaq Composite dropped 414.20 factors, or 3.52%, to 11,340.02. The primary indexes registered their biggest weekly percentage drops because the week ended January 21, with the Dow down 4.58%, the S&P 500 down 5.06% and the Nasdaq down 5.60% for the week. The S&P 500 is now down 18.2% for the year thus far. On Friday, the S&P 500 Boom Index took a 3.7% hit, whilst the price index fell 2.2%. The inflation document changed into published ahead of an anticipated second 50 basis factors rate hike from the Fed on Wednesday. A further half percentage point is priced in for July, with a sturdy hazard of a similar circulate in September. One fear is that an competitive push better on fees through the Fed should ship the economy into recession. Among the day's losers, Netflix Inc. Nasdaq, NFLX, slid 5.1% after Goldman downgraded the streaming video massives inventory to sell from neutral due to a probable weaker macro surroundings. Declining problems outnumbered advancing ones on the NYSE with the aid of a 5.70 to 1 ratio. On Nasdaq, a 4.05 to 1 ratio preferred decliners. The S&P 500 posted one new 52-week high and 44 new lows. The Nasdaq Composite recorded 17 new highs and 326 new lows. Volume on U.S. exchanges changed into 12.62 billion shares, compared with the 11.88 billion average for the entire consultation over the last 20 buying and selling days.